Yahoo Finance Executive Editor Brian Sozzi here, taking a look at a live shot of the opening bells on Wall Street on this Friday morning. A moment of magic ringing the bell at the New York Stock Exchange. Washington Trust getting things underway over at the NASDAQ. Now the stage is set for Big J. Markets are awaiting a very important speech by Fed Chair Jerome Powell at Jackson Hole around 10 a.m. today. The bulls are hoping Powell finally comes around to the view of cutting interest rates at the Fed September meeting, or at the bare minimum, signals at least one rate cut will happen this year. Now, opening bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. You should have it. It's been the year of the bull market. Let's head over to Yahoo Finance senior reporter Ali Canal at the NASDAQ in Times Square. Ali, this market is in wait-and-see mode ahead of that Powell speech.
Wait and see mode, and we're seeing stocks open across the board in the green here. We're seeing the Dow up 250 points, the NASDAQ up about 0.1%, and the benchmark S&P 500 up about 0.3%. It's been interesting to look at the bond market here, Brian, because we really haven't seen much action in long-term yields. The 10-year yield is hovering at around 4.3%, 30-year yield at around 4.9%, so firmly above that 5% level, which tends to give markets a little bit of a jitter here. So really range-bound in the bond market. Treasuries seem to be pricing in the fact that Powell will come out a bit more dovish and signal that the central bank is ready to cut rates in September. We'll see what he says in just about a half hour. I also want to take a look at tech stocks, in particular Nvidia. This is one of our top stories today. We're seeing shares down about 2%, and this comes after the company reportedly asked its suppliers to pause H20-related chip production. Those are those China chips. The information reporting that the directive comes weeks after Chinese government officials told local companies to stop buying the chips due to alleged security concerns. Now, CEO Jensen Huang has advocated shipping out American chips so that they do not go to local competitors like Huawei, but we are seeing shares a bit pressured in the midst of that news. Meanwhile, you're seeing a nice pop for a name like Google, Alphabet. Google winning the multi-billion-dollar cloud contract from Meta that will span over 6 years. Some other tech names like Broadcom, Amazon, Apple also trading in the green, and this comes after the past 5 days. If we look at that, you're seeing tech really in the red, and this is on the heels of that rotation trade that we've been seeing among stocks out of those momentum names into some undervalued pockets of the market. But Brian, as we're saying, markets really in wait-and-see mode. That Powell speech coming up in just about a half hour.
I'm so psyched, Ali. I just can't contain my enthusiasm. All right, we'll talk to you in about a second. All right, today's an important test of the bull market. What Fed Chair Jerome Powell says on the economy, inflation, and rates at Jackson Hole could set the tone for markets into September. Miss a word, and you could be completely caught behind the 8 ball. So here's my playbook into the speech. First, pay careful attention to what Powell says on inflation. Big retailers have warned this week about high prices beginning to take hold in their businesses. That's, of course, Walmart and Target. This commentary is not too far removed from the hot producer price index we got earlier this month. Inflation expectations also rose in the latest consumer sentiment report. Here's what Cleveland Fed President Beth Hammack told Yahoo Finance on inflation yesterday.
My biggest concern is that inflation has been too high for the past 4 years, and right now it's been trending in the wrong direction. And so I think it's really important that we stay modestly restrictive to make sure that we can bring inflation back under control.
2, keep a watchful eye on how Powell describes the labor market. Job creation has slowed in recent months. Goldman Sachs economists said this month the economy could only be printing 30,000 net new jobs a month in the near term. Hammack is especially focused on the unemployment rate.
With the changes that have happened in immigration policy, it's not clear that that headline growth number is going to be as informative as things like the unemployment rate, the vacancies to unemployed ratio, other things that we're looking at on the employment side of the mandate.
The opening bid roundtable today, Ben Emmons, FedWatch Advisors founder and chief investment officer, and Yahoo Finance senior reporters Ali Canal and Inez Ferre. Ben, I want to go over to you. What are you expecting from the speech in about a little bit, 30 minutes or so?
Hey, Brian. I was looking up this morning through my AI tool and saying, I basically asked the AI agent, how many times has Powell mentioned inflation in his speech at Jackson Hole? And he's done it every single time since 2018, really emphasized price stability. And I think that will again be in this speech too, especially when you talk in the context of labor, right? If you have an economy that there's no price stability, then it doesn't function well. Then you don't have, maximum employment either. So there's something of that nature, of that price stability theme, probably coming back that will be sensitive to markets because the way the market's trading this speech is about you're going to be more worried about the labor market than inflation, at least to some extent, and therefore the rate cut is solidified. If you're going to emphasize more price stability, then we take back more of the rate cut probability from here, and you can tell from that probability it's now 67%. That's already less than it was, a day ago, 2 days ago, and it's more like 75, 80%. So markets are a little jittery here going in that Powell will be more about inflation than the labor market.
Nez, good to see you on the roundtable as always. I always crack myself up thinking about this Jackson Hole event. Every year, everybody gets so excited. We play up the drama. Oh, Jackson Hole, oh, speech from the Fed chair. But at the end of the day, doesn't corporate America, what they do in sales and profits, matter the most to this market? And look, the second quarter earnings season has been pretty darn good.
It has. There have been strong earnings. About 83% of the companies that reported of the S&P 500, they beat on earnings. So they have done well. To the point of inflation, I definitely think that that is something that the markets will be looking at in Fed Powell's speech today. But can he signal at least 25 basis point cut in September or give some type of guidance signaling towards that? And at the same time, trying to quell those concerns about inflation. I also think that it'll be interesting to see if he does some type of nod towards Fed independence, as right now probably the Fed wants to sort of tone down the heat between the Fed and the Trump administration. So there will be a lot to see in this speech today, very widely watched, touching on many points, whether that be inflation, the labor market, and also Fed independence.
No, I want him to turn up that heat, Inez. Come on, Jay. Let's fire back at the president. But Allie, let me get over to you here because it is amazing to me that going into this speech, 70% of market participants think the Fed is going to cut interest rates. I've seen no evidence that inflation is coming down. Hot PPI. We had the Michigan consumer sentiment, inflation expectations up. I don't know what the market is thinking here. I look at Walmart and Target, these earnings calls. I see inflation riddled all over them.
Yeah, and you're right. These companies have been talking about the pressure of inflation and how they're having to raise prices. Walmart just said that they expect further price increases throughout the end of the year due to inflation. And if you take a look at the Fed minutes that were just released on Wednesday, of course, this came prior to that labor market report that spooked markets a bit. But the Fed officials are also concerned about rising inflation. So I think it's all going to come down to what Powell says on both sides of the mandate. Which is he going to focus on labor market? Is he going to focus on the inflation side of the equation? We've been hearing from Fed officials, even our own Jennifer Schomburger out on the ground there at Jackson Hole has been talking to these Fed officials about how they are worried about an inflation resurgence. We saw what happened a few years ago. The Fed probably has a little bit of PTSD from those moments. They don't want inflation to run rampant because that is going to make it that much harder to control and rein back, especially at a time when the services side of the equation is getting a little more sticky. And economists have told me that that is where the problem lies, because that means there's maybe something a little bit more sinister going on underneath the surface of the economy than just tariffs. So Powell, a lot riding on his speech, and I think that is where we're going to see those CME Fed Fund futures change up a bit, right? There's less conviction than we had a few weeks ago that we will be seeing that September cut. But like you said, we're still at around 70% odds.
Yeah, shout out Jen Schomburg. I mean, just crushing it out there in Jackson Hole first. Ben, back over to you here. I'm going to toss the bulls a bone here. Let's say Powell comes out here and does signal that rate cut for September. Do you think it will be a series of rate cuts that the Fed will embark on? Whereas, if we're having this conversation a year from now, the Fed will have cut rates 7 or 8 times like some people are chatting about on the street.
Could be, Brian, because once you start, it's actually a process, right? They always thought about inflation as in it continues to moderate with a bumpy path, but it will moderate. So the difference between inflation and the funds rate gets wider. And as that happens, you can cut rates. And I think if you start cutting rates in September, then they feel that inflation is back on that track, potentially further down again in the future. Therefore, you can do a series of cuts. The other idea of here is, though, Brian, is that what they did last year, they surprised markets by cutting by 50 basis points because they were getting pretty worried about the labor market suddenly having a spike in the unemployment rate. And some of that risk is developing it once again today. And so this will be in their mind about should we move more aggressively to get ahead of this problem in the labor market. That's absolutely not priced into the markets. But if that actually happens, then we're really igniting a major rally in stock markets, obviously. So I think it's a rate cut and the start of a series. Only today there's a bit ambiguity what he exactly will say about that rate cut. I don't believe he will signal that, but he will strike that balance between inflation and labor. And I guess if the equity futures are signaling this a little bit, that probably is a balanced strike, therefore positive enough to have a bit of an upbeat day today.
Ben, I'll follow up with this. I'm going to take that bone away from the bulls for a second. I think Powell's not going to say really much of anything today as it pertains to interest rates. And if that's the case, I could see this weekend being the Trump administration going to put out its entire, he's going to put out Bessent, going to put out Lutnick calling for Powell to be fired early. If that's the case, how do markets open on Monday?
Well, I don't think the markets will react so much to that sort of rhetoric that comes out because we all know like the issue of removing the chair really has to be for cause and there's a lot of legality about it. So markets have figured out like you can't just remove Powell that easily. So I don't think that will be much of an effect, but there will be an ongoing debate once again as we're getting into next week. Every data point that comes out and shows mixed sort of output, like as in either maybe weakness or softness, then you get the speculation back about, hey, Fed, you got to move faster here. You're behind the curve. So I think today will be, okay, you're getting a bit of a volatility moment. If that then, this is like a very balanced speech, he doesn't say anything. I think you're going to get a bit of a dropping on Monday, sort of like, okay, that was disappointing. We got to focus on data. If data is softer, I think the rate cut speculation comes back really quick.
And as you know where you can see the nervousness in the market, really, it's been the S&P 500 this week, but it's been the rotation out of some of these hot momentum stocks like a Palantir. Even Nvidia has been weak all week long ahead of this China chip news.
Yeah, that's right. We have seen that big rotation happening, what some strategists are calling a healthy rotation, really. What I found interesting was some commentary from Fundstrat that was basically saying, look, they feel that the markets perhaps bottomed this week earlier this week, because perhaps the markets have baked in sort of a hawkish tone from Fed Powell. So perhaps Fed Chair Powell. So perhaps whatever he says will be interpreted as dovish. Also, if we take a look at where crypto went this week as well, which it went lower, that tends to lead the equities. And they believe, these strategists at Fundstrat are saying, look, the crypto may have already also bottomed, with Ethereum bottoming on Tuesday and Wednesday. So perhaps it's up from here, regardless of what Powell says today.
Allie, real quick, could you pull up a chart of Palantir? I'm just, the week has been just horrible for this company. I mean, it's come back off of lows, but still, I think the activity in Palantir is indicative of that nervousness in the markets.
Yeah, and I'm looking at the Wi-Fi Interactive right now. We are down about 1% today in intraday trading, but over the past 5 days, we are down 13%. Month to date, we are up a bit. And if you take a look at a year to date, I think it's interesting to just see the rapid rise of this stock. I mean, we are still up 100%. And that's something that we were talking to Interactive Brokers Chief Strategist Steve Soznick about, that volatility works on both sides of the equation, right? Just as quickly as a name can go down, it can go up. And Palantir has been one of the top performing stocks this year. It was the top performer in the first 6 months of the year. We have seen a bit of volatility, maybe a bit of profit taking, a bit of that rotational trade that Inez was just mentioning. But we also know that retail traders have aggressively been buying the dip in some of these names. And that's something that strategists have been preaching throughout this entire week. Now that we have a little bit of a pullback, get into those momentum trades, get into tech, get into names like Palantir, and capitalize on some of these dips. Will we see another dip after Jerome Powell speaks today? Possibly, but it feels like over the long term, strategists are bullish on this rally and do think it's healthy at this point in time.
Oh, this roundtable is killing it. I'm glad y'all staying with me. Straight ahead. All right, straight ahead. Cracker Barrel investors dealing with a case of acid reflux, and it's almost showtime for the Nvidia bulls. We'll be right back. Welcome back to Opening Bid. It has been an unsavory week for the management team at Cracker Barrel and its investor base. At one point Thursday, Cracker Barrel had lost $200 million in market cap following CEO Julie Masino's decision to change the company's iconic logo. The new design eliminates a long-standing drawing of a man leaning against a barrel. In its place is a cleaner logo of just the chain's name. Yeah, pretty simple. Cracker Barrel ended up losing $100 million in market cap on Thursday. Its total market cap now stands at $1.22 billion, according to data right on Yahoo Finance. All right, let's turn to now to our stock of the day. It's not Cracker Barrel. The Wall Street bulls on Nvidia are stampeding over themselves, headed into the chip darling's August 27th earnings report. At least 9 analysts have hiked their Nvidia price targets this week alone. The average price target on the street on Nvidia now stands at $191, according to Yahoo Finance data, about 10% above current price levels. Suffice to say, the street is looking for big things from Nvidia's earnings report. Most important is the general expectation that AI demand is accelerating. The street even thinks news around Nvidia's China business will be bullish for the stock. CEO Jensen Huang fueled that narrative today during an overseas trip where he teased the company is in talks with the U.S. government on shipping a new, more advanced chip to China. But there is one worry on Nvidia headed into the report, brought up by Evercore ISI. At an 8% weighting of the S&P 500, Evercore ISI says investors are concerned that Nvidia can't capture a higher weighting because there is no precedent. That's an interesting worry. All right, still with me, my opening bid roundtable, Ben Emmons, Ali Canal, Inez Ferre. Inez, I'm going right to you on Nvidia. I know you are an avid Nvidia watcher. That was interesting by Evercore ISI analyst Mark Lepacius, voicing concern that the stock can't get any bigger than the S&P 500. Never thought I would hear that before.
I didn't either, but I did find it interesting, their commentary on, look, demand is accelerating. There's still buyers of the stock ahead of the results next week. But really, AI is the trade that we're talking about here, because beyond what Powell says today, we're looking at AI next. I mean, this is what the market has been looking at throughout this whole year as well. And when you look at the performance of how stocks have done this year, regardless of that rotation that you saw this week, we are still looking forward to AI pulling us through here. As far as China there has been some worries about China perhaps telling companies don't use Nvidia chips. But look, Nvidia has proven that it has been able to negotiate, and it's been able to strike a deal with the U.S. government. So there's a lot of bullishness around its ability to be able to provide chips to China as well. And keep in mind that you still have the hyperscalers that make up the bulk of the revenue for Nvidia. So as long as the hyperscalers are doing well, as long as the AI trade is doing well, if you take a look at the S&P 500 right now, you're looking at XLI, XLU, XLC, and tech, which are the leaders. So all of those are sort of the touch points around AI.
Ali, this Jerome Powell speech at Jackson Hole, it's cute. It gives us something to watch on a Friday in the summer. But let's be clear. This report from Nvidia next week, I would argue, is more important than what Powell says today. Now, I may get a lot of guff on social media for that comment, but nonetheless, I mean, this is an Nvidia-focused market, as it should be.
I don't disagree with you, Brian, considering that we know earnings power the stock market. Why are we up at record highs? It's because we've seen consistently strong earnings. I think if we had a pretty meh Q2 earnings season, I don't think we would be trading at these levels. So it's all about earnings. Nvidia makes up a lot of the S&P 500, about 8% of the index at this point. And some analysts, as we were just talking about, say it could maybe nab as much as 16%, just underscoring that total dominance. It is the one company, it was the first publicly traded company to hit that $4 trillion market cap. Analysts on the street say it should really be higher than that, maybe a $6 trillion market cap. So a lot is riding on this. There's multiple touch points when it comes to some of the most important companies out there. Amazon, Meta, Google, like Inez was saying, these hyperscalers, they're aggressively spending on AI. And as important as the China story is, that is really where investors are focused on. Are these hyperscalers continuing to spend? And what we saw so far this earnings season, and even some of the recent headlines that we've been getting, yes, they are aggressively spending. That's going to be a boon for Nvidia earnings moving forward. And look, Blackwell chip demand, that's selling out fast. There's a next gen chip already in the bucket that's pointing to strong demand as well. Nvidia sales expected to jump about 50% this quarter. So another sign that the business just continues to reaccelerate at a time when we're in the very early innings of artificial intelligence, and we don't have the bulk of U.S. businesses, not only in domestically, but around the globe, utilizing AI. So that just points to further growth ahead. So we'll have to see what these earnings tell us.
All right, let's keep it moving here and fire up my question of the day. Here it is, friends. How bad will the plunge in stock prices be if Fed Chair Jay Powell doesn't strongly signal a rate cut in his Jackson Hole speech? Ben, over to you.
Yeah, that will be a bit of a sell-off. I do think you actually reverse the rally we see now. So I think something like a % move or so in the S&P, that's possible if he gets too hawkish in the speech.
Inez, I know you're wondering, like, where does Sozzi come up with this stuff? I mean, where does he pull these things up? But Inez, but look, if he comes out here and says nothing, I mean, it would lay the groundwork, in my humble view, of a correction, and it would be a needed correction. This has been a market that has been sent higher, sure, like Ali mentioned, because of corporate earnings, but in large part, too, because of a series or the potential for a series of rate cuts from Powell.
Perhaps. He has so much to think about during this speech. I doubt that he wants to send the markets tanking. But look, strategists are still very bullish on what we've seen with the markets this year. You have UBS that just raised its price target on the S&P 500 for the second time in 2 months. Strong earnings, the AI trade, the expectation that the Fed will ease at some point, whether it's 25 basis points or not in September, or whether it's even pushed out to later this year. There's still the expectation that that the Fed will start easing.
Ali, what a way to go out for Powell, potentially tanking the stock market in Jackson Hole and getting raked over the coals on the weekend political shows by the Trump administration. Not exactly, I would imagine, how he would want to draw things up.
No, it's been pretty a wild year for Jerome Powell, but has handled it with as much even keel, calm, cool, and collectedness, I want to say, than he could have, I think. But when it comes to what the stock market reaction will be, I think it will depend on his tone. Maybe he won't directly signal a September rate cut, but how does he talk about inflation? How does he talk about the labor market? Does he mention the risks that are potentially going to hit those sides of the Fed's dual mandate there? So listen to the tone, look at the bond market, and look at those more speculative areas of the market to tell us and read through the tea leaves of what investors are ultimately thinking. And of course, as always, I'm going to have my eye on the CME FedWatch tool as well to see how those rate cut expectations change here. Because again, I don't think he's going to explicitly come out and say that we're cutting rates, but how markets read through that tone, that's going to make all the difference.
I can't wait for his post-Fed book to come out. I will be a big reader of that one. A big thank you to my contributors today. Have a great weekend, y'all. And here's my forward-looking thought of the day for you. What you will hear shortly from Fed Chair Jerome Powell on the economy from Jackson Hole is naturally very important. So are any clues he drops in the direction of interest rates. But amidst all the inevitable flurry of headlines, I don't want you to forget something. While interest rate policy matters a great deal in investing, it's not the end-all, be-all. A good investment will prove to be a good investment because of the underlying asset's health first and foremost. So go out on Saturday morning, grab that $8 Starbucks cold brew, and read a few corporate balance sheets. Bask in the glory of true stock analysis. And hey, send me a pic on X at Brian Sozzi of the balance sheet you are reading. Keep them coming. Tune in next week on Opening Bid for my conversation with former Treasury Secretary Larry Summers. That's coming at you on Monday at 9:45 a.m. And coming up, Julie Hyman has you for Market Catalyst and instant analysis of Fed Chair Jerome Powell's speech. Jackson Hole, I'll be back on with Julie at 11:30. We'll be talking with Jeffrey Katzenberg and Kimball Musk. That's Elon's brother.